Good morning, everybody. Hey, welcome to Tuesday, Cinco de Mayo, May 5th. I hope your day is off to a good start. You'll notice I am back in the office today. We started our regular office hours or this past Monday, yesterday. So we are here and getting back in line and working forward. So, hey, I hope you're doing well today. We've got some information to talk about, some earnings, and excited that you're with us. Stay tuned. Dave will be with us here in just a moment.
FM. Carlos Santana with Rob Thomas from Matchbox 20 there back a few years. It's smooth, man. Is it smooth rolling on Wall Street this morning? Sure it is, yeah. Which way's it going to go? It's anybody's guess sometimes during an epidemic, but we do our best to try to figure it out each morning. On the telephone to look at finances is Phillip Statler from Statler Financial Services, and I can tell we're reopening Florida because, Phillip, you're operating out of your office this morning, right?
Yes, sir. Back in the office today and excited. We opened up in our regular hours yesterday, but I had some stuff scheduled, so I worked from home yesterday. But back in the office today with a full schedule. So, hey, give us a call, schedule a time to come by and visit. We be happy to talk about what's happening in the marketplace.
As weird and upsy-downsy as things are, something we've been saying for a long time, that an unbiased eye is always helpful. Let me see, looking at the range on the Dow just overnight, 23.82. It was good, 400 points just in the futures market overnight. That's enough to really screw up somebody's retirement. Yeah, I think it'd be a real good idea to get some unbiased advice today from Statler Financial. Talking about people who didn't get the right advice or might have gotten in trouble because of the coronavirus, we got a bankruptcy out there from a major retailer. J. Crew went Chapter 11 yesterday.
Yeah, and that was kind of been talked about all last week. That was on the horizon. We knew that was kind of coming, and I think they're probably one of the first of many to come when we start looking at retail establishments. I mean, you and I've been talking about how pennies. We just don't know how in the world they're going to reopen and get back up and going again. And there are others that are struggling. Talking about one of the reports I have in not in earnings today, but L Brands, right? Victoria's Secret. They
Yeah.
were selling. L Brands was selling Victoria's Secret to a private equity firm, or at least the majority of it, and that company decided they didn't want it, and so because they closed all the stores, and well, they
Yeah.
came to an agreement. They came to an agreement, and they so they are. So now L Shares is I mean L Brands is going to have Victoria's Secrets, and so they're trading down about 5% this morning.
Yeah, I can't imagine. Yeah, there's no lifting effect on that stock this morning. Yeah, the conventional wisdom is this is going to be a bloodbath on some of the major brick and mortars that have been in trouble for some time. Anyway, we mentioned J.C. Penney because nationally they've been kind of a poster child ever since the beginning of the Christmas season, wondering whether or not they were going to make it through. Neiman Marcus conventional wisdom is they may very well have to go Chapter 11 before the end of the year too. But something you and I mentioned before we went on the air, yeah, we're talking about all these major national things, but on a more micro basis, just around here, the faster we can get stores up, running, and alive again, safely, of course, but still get them going, the less damage there's going to be on our local economy. Restaurants come to mind as one of the beginnings because they operate on kind of skinny margins to begin with in the final analysis. But we're watching our local people go as well and hoping that they make it through this gradual reopening process as well.
That's right, Dave, and I can't say enough about people making sure that they are, helping these guys out, doing business with these restaurants, even if it's takeout. I mean, anything is going to help them stay alive, and them staying alive is a benefit to us in this community that we have decent places to go out to eat when this thing's all said and done. I know I don't get excited about going sitting in a restaurant that's only 25% full. And the restaurant owner is not thrilled about having to do it that way either. But we need to be helping those guys out as much as we can.
Absolutely. And as soon as we're allowed to get a haircut again, do keep in mind that most of our barbers, beauticians, and nail technicians are independent contractors. That means that they've got a little bit more of a delay and a worry in terms of getting their stimulus check and in terms of getting unemployment. So consequently, the longer they're closed, the more painful that's going to be for businesses as well. And another casualty rate becomes imminent.
That's true, Dave. That's going to be those guys have suffered, and we were hopeful that they'd be open up yesterday too, but not the case. And hopefully, those guys in Orlando made a good enough case to Governor DeSantis that we'll see them open up maybe by the end of this week. That would be great.
Absolutely. My wife's a hairdresser, in anticipation of being able to open on Monday before the actual word came down, was running up on Facebook all of the things that she was going to do to make sure everybody was safe. And my Lord, by the time Danielle was done talking about it, I thought she had a hospital operating room going in there. You can be careful. So we're kind of cheering for our personal services company. The other things going on the national front is one of the conventional wisdom pieces that I've been reading is one of the reasons that we haven't tested that low yet again is the fact that the Federal Reserve has been going on a buying spree kind of through a shell company because the government legally can't do this. So they're doing it through through one of the major brokerage firms, through BlackRock, buying a whole bunch of corporate debt. And my understanding is Warren Buffett's not the least bit impressed by that, huh?
Well, Buffett, he's just given a big word of caution that, hey, what they're doing today is going to have major consequences, like you and I have talked about, down the road. And those consequences are going to come with a big price tag. And I know we got to keep things running today, but are we ready to pay that bill when it comes due?
And on top of that, extending business debt into the federal realm kind of starts touching on something that made everybody a little bit squeaky a few years ago, and it was proposed that folks could take their Social Security benefits and invest them in private enterprise as well, because a fund that big could basically own the American economy, which is something that a lot of people got queasy over. Well, do it with corporate debt, and you're doing pretty much the same thing, just with another element on the balance sheet.
That's right. And so I'm not so sure. It's never been done before. It's going to be interesting to see how this all plays out. Maybe it will be a good thing. Maybe the government will actually make money on this deal and help pay back some of the stimulus stuff that we've had to use.
Now, yeah, and the other part of it, too, is how fast they get out of it as well, because that'll, number one, that determines whether they make money, and number two, how fast we end up having this little incursion. I won't even argue with whether or not it's necessary. It's how fast we can get out that scares me.
Yeah, exactly. You're right there.
The other thing going on macro-wise is the only real government report that came out today kind of surprised me. Our trade deficit in March went up by 11.6% during a month in which we basically didn't buy anything and we weren't making anything either. But we still managed to buy 11.6% more from overseas than we managed to sell overseas, which kind of kicks me in the shins and makes me wonder how we did that.
Well, I can tell you one way is a lot of masks are produced overseas. We had to buy a bunch of them. So I think there's that. You're right. I mean, you wouldn't have thought that would have happened, but obviously it did. Hey, I just got this across my ticker. I want to mention the Norwegian Cruise Lines says that there is substantial doubt about its ability to continue as a going concern.
Oh, geez.
That's another bankruptcy right there.
I have been watching carefully. Another possible filing in court from an entire big sector, right?
Exactly. So, yeah, that's though I did see somebody, Carnival, one of the cruise lines said that they are starting to take reservations for August 1st. August 1st will be their initial cruise out, they said.
A good friend of mine that books cruises has been advertising on Facebook and been saying, hey, we're booking starting in August. Fingers crossed that the fear factor is gone by then and the travel business can recover at the very least later than we'd like, but at the very least recover.
Yeah, I mean, based on what Norwegian's saying here, you just really hope they can recover.
Scary thought. Earnings season does continue, and I know you got a boatload of them this morning, don't you?
Yeah, I do. It's it's that time of year where they all start winding up and coming through. So let's start. We're talking about travel with the cruise lines. Let's look at Alaskan Air. Um,
Okay.
Alaska Air, they lost 82 cents a share. What do you
What were
expect?
they expected to lose?
They're expected to lose more than that. They're expected to lose $1.13 a share. So, hey, they did better than expected, right? So, demand was below 90% of what it normally is, which is okay. That's probably expectable, right? Um,
Yeah, in the airline industry, I expect bad news, and when it's not as crappy as people expected, I'll bet the stock's going up, right?
it is, man. It is going sky high. It's up 7.25% this morning.
Gosh, I only lost a few $1,000,000. Let's buy their stock. Easy to laugh at, but at the same time, in a distressed industry, I mean, losing less than you were expected to lose is probably not a bad thing, right?
That's right. That's a good thing. That's a good thing. So we have DuPont, the industrial maker, materials guy. They earned 84 cents a share, which was better than the 75 that was expected. So they did well. They raised their guidance a little bit. So some good things there. They're up a little over 2% this morning.
I'm half surprised somebody actually issued guidance, period.
Yeah, me too. They just kind of confirmed there. So we got a couple pharmaceuticals. I guess I only picked up one though. So we got Regeneron Pharmaceutical. They beat also. Revenue was above forecast. They have an eye drug that's doing really well and is keeping them moving forward. They're up almost 5% this morning.
I think I remember them being mentioned as one of the companies that was in the lead as far as the vaccine research as well.
Okay. All right. They
Thought I
didn't mention
remembered.
anything of that. So then we got Wayfair. Hey, Wayfair, another one of those, retailers, just home goods and furniture and that kind of stuff.
Hmm.
They lost minus $2.30 a share for his last quarter. Again,
Crud.
though, that was 30 cents better than expected. And so, and the revenue actually did beat across the deal. They are, they're up compared to even a year ago. So Wayfair's benefiting across the board, and they probably don't show up on your big winners list because you don't have them, but they should be the big winner of the day. They're up 23% this morning after being up almost 10% yesterday.
Wow, they would be. They aren't listed on my listing of the big ones, but yeah. I think, isn't that the company that signed Kelly Clarkson as their endorser a while ago?
It could be. It could
I
be.
think they're the ones that had that. They're doing a whole run of cable TV ads with Kelly Clarkson selling everything in the house from pillows to couches to dining room islands.
Probably so then. So we have, I've got a restaurant and I've got an insurance here. So we got Shake Shack. They earned 2 cents a share, which was better than breaking even, which was what was expected. And so if we look at Shake Shack here, they're up 2.3%. AIG, the insurance company, they came in at 11 cents a share, well below the estimate. They were expected to come in at 72 cents a share, so a big miss for AIG. Revenue, though, did come in ahead of expected. They're not sure how the COVID-19 is really going to end up affecting them, but they're trading up.
Hmm.
It's one of those hard to figure out, but they're up 6.5%, so not just a little bit. They're up pretty big.
Cool. I got to believe the big insurance companies are putting in some pretty good-sized reserves for expected losses off of business interruption insurance and the like. Wouldn't you assume?
Yeah, I think so, and they don't think they're going to be responsible for it, but I think the states are going to demand that they are responsible for it. So, hey, the last one I have is back to the travel industry, Avis Budget Rental Car. We've been talking about Hertz and how they're on the brink of going bankrupt. Avis, they did lose $1.33 a share, but again, that was better than expected. They were expected to lose $1.84 a share. So now their revenue was below forecast. They expect that revenue will continue to decline through June, but they hope that June they'll start to see a gradual increase. And they're up 3.8% this morning.
Cool. Well, resetting the table for the morning. After a rotten day or two on Wall Street, we actually turned the corner yesterday. It ended up in green ink. NASDAQ had a pretty substantial recovery, up 105 points. Dow was up by 0.11%. S&P was up by 0.42%. A good day overall on Wall Street. 45 minutes before we open, Phillip, are we going to keep the momentum going?
We are, and you're right. Yesterday, those stocks, they fought back, right? Because they were red
We were
all the way through
optimistic.
the morning. So
Yeah, we weren't optimistic when we
no,
started the day.
we were not. So, but hey, today we are definitely in much better shape than where we were yesterday morning. So we've got the Dow and the S&P 500 both up 1.27% right now. NASDAQ's up 1.3%. So everything looking like it's going to open to a pretty good size upside when we start the day. We've got silver up almost 1%, and we've got gold down a little over 0.5%. So they're kind of knocking each other out there. We got crude oil. Man, this has got to be a good day for them. They're up 12.5% to $22.95 a barrel.
Not in the zip code of breaking even yet, but at least it's getting into the area code by now, right?
It's moving in the right direction.
Now that's good positive movement. I still choke on myself while I cheer for a raise in the price of oil, but there comes a point. Overseas markets, Japan is having some problems. They were arguing in the body politic about the coronavirus strategy, so they were off. Everybody else in Asia up, ditto for Europe midway through their day today. Phillip, like we were saying earlier, I did 400 points worth of swing on the futures overnight. That's kind of the poster child for instability. Somebody need help to stabilize their retirement fund. If they're anywhere close to retirement age, they need help. How do I find you to get that help?
Dave, folks that are in that retirement danger zone, that's 10 years prior to retirement, definitely should take advantage of this movement up that we've seen over the last several weeks and do some allocations. Let's rediversify between safety and risk. That's what your broker doesn't talk to you about. They talked about that pretty pie chart, but let's talk about risk. 863-382-0037. Call us right now to schedule your no obligation financial x-ray. Join us on Facebook at Statler Financial Services, where we post this daily briefing every day and our radio show for the weekend. So join us there. And then every weekend, like I said, join us for the Statler Financial radio show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
And up to the minute right here tomorrow morning as well on Light FM. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, man. You have a great one.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. I hope your Cinco de Mayo is off to a great start. Have a great day, and I will talk to you again tomorrow.